You know that dream of finding that one single stock that could just change everything? Well, nowhere does that feel more real than in biotech. It's this incredible world of miracle drugs and massive breakthroughs, a place where fortunes are literally made or lost overnight on a single test result. But here's the thing. Beneath all that scientific hope, there are these hidden financial traps that can sink your entire investment, even if the science actually works.
And this quote right here, it just perfectly captures the gamble, doesn't it? The belief that buried in this giant pile of thousands of tiny, cash-burning companies is the next revolutionary technology. It's this hunt, this search, that makes biotech one of the most exciting and, let's be honest, one of the most dangerous places you can put your money.
Okay, so here's our game plan. We're going to break this whole thing down. Think of it like we're navigating a funnel of risk. We'll start with that big, exciting dream that pulls everyone in, and then we're going to drill down, layer by layer, into the hidden traps that most people never even see coming.
All right, let's start at the very top of that funnel, the dream itself. This is the world of microcap stocks. We're talking about small, often totally obscure companies where the potential for what the legendary investor Peter Lynch called a 10-bagger, a 10x return on your money, is very, very real.
And just to give you some perspective on how big this world is, get this. Of the roughly 4,000 companies traded on U.S. stock exchanges, about a third of them, 30%, fall into this microcap category. So yeah, it's this huge territory filled with amazing potential, but it's also a complete minefield. You really need a map to get through it.
I mean, that's really what the dream is, isn't it? It's like you're walking down the street and you find the very first Starbucks when it's just one single store. You're getting in on the absolute ground floor of something that could become a global giant. The potential return is just astronomical, and that's the prize that keeps investors chasing these biotech stocks.
But before that dream can ever become a reality, every single one of these companies has to face the first great filter. You can think of it like the first boss level in a video game, the U.S. Food and Drug Administration, the FDA. For a little biotech startup, getting through the FDA's clinical trials, well, it's everything.
And this is exactly why people in the industry call FDA decisions binary events. There's almost never a middle ground. It's one of two things. The drug works and gets approved, leading to this colossal success where the stock can jump hundreds, even thousands of %, or it fails, and the company's value can be almost completely wiped out. We're talking in a single day. It is the ultimate boom or bust scenario. So this is where most investors, they stop their analysis, right? They focus entirely on the science. They ask, will the drug work? But what if I told you that even if a company clears that massive scientific hurdle, there are other more sneaky financial risks that can completely destroy an investment anyway?
Let's talk about the biggest one, the one you absolutely have to understand, share dilution. Seriously, if you're going to invest in biotech, you have to get this. Think of it like a hidden tax on your shares that can just quietly, slowly eat away at your investment, even while the company seems to be doing great.
So what is it? Put simply, dilution happens whenever a company creates new shares of stock out of thin air, usually to raise money. And when the total number of shares goes up, your personal slice of the company pie, well, it automatically gets smaller. This pizza analogy is perfect. Imagine the company is a pizza. When you invest, maybe it's cut into 8 slices, and you own one of them. But to fund all that expensive research, the company keeps issuing new shares, which is like cutting the pizza into 12 slices, then 16, then 24. See, the pizza itself, the company, hasn't actually gotten any bigger, but your piece of it just keeps getting smaller and smaller.
And believe me, this isn't just theory. Let's look at a real-world example. Take the cannabis company Canopy Growth, which, by the way, operated a lot like a speculative biotech. Back in 2015, it had about 98 million shares outstanding. But of course, the company needed a ton of cash to grow, so it just kept issuing new shares. Now fast forward just 4 years to the end of 2018, and that number of shares had absolutely exploded by 250% to 343 million. Just think about what that actually means for an early investor. Let's say you were savvy and you owned 1% of the entire company in 2015. By 2018, your stake had shrunk to just 0.23%. Your ownership was diluted by over 75%. So even as the company's total pie got bigger, your personal slice of that pie was decimated. And companies have all sorts of ways of doing this. The most common is what's called a secondary offering, where they just sell brand new shares to the public. They can also use convertible debt,
They can pay for acquisitions with stock instead of cash, or they can issue millions of stock options to their employees and executives. Now, these are all legitimate business moves, but they all have the exact same effect. They dilute you, the existing owner.
Okay, so let's say you found a company. It has great science, and you've checked it has a low history of dilution. You're safe now, right? Not quite. There is one more layer of risk, and honestly, it is the most unpredictable of all. Politics. The actual rules of the game can be completely rewritten overnight, and it's totally outside of the company's control.
Just look at how quickly the ground can shift under your feet. Let's follow this timeline. In 2023, the FDA bans a bunch of products because of safety concerns. Okay. Then, by 2025, a related company sees its stock plummet 35% after a partner backs out. But then, get this, just a year later, the FDA announces it's reconsidering the entire ban because of political pressure. For an investor, this is just pure regulatory whiplash. It's a level of uncertainty that is literally impossible to price into a stock.
So, after navigating this whole funnel of risk, from the big dream all the way down to the political chaos, where does that leave us? Well, it leaves us with the need for a framework, a new way of thinking that goes beyond the hype of a miracle cure and actually looks at the entire picture.
This whole journey really leaves us with a set of guiding principles. It's not about stock tips, it's about a mindset. You have to look beyond the exciting science and look at the actual business model. You have to accept the boom or bust nature of FDA trials. You need to become obsessed with the company's share count, not its press releases. And finally, you just have to accept that some external forces, like politics, make certain industries almost impossible to predict with any real confidence.
And that brings us to the final question. Once you really understand all the hidden rules of the biotech gamble, the science, the dilution, the politics, what's the right move? For some people, it might be to just get up and walk away from the table. But for others, the real opportunity lies in learning those hidden rules better than anyone else, and finally, playing the game with your eyes wide open.